This program is brought to you by Real Estimate. Get a free real estimate of your home's value today on the realestate.com.au app.
Welcome back. Let's take a look at this weekend's auction numbers. Nationally, there were 1,852 auctions with a clearance rate of about 58%. Sydney held 723 auctions with a clearance rate of 55.7%. There were also about 1,500 private sales in New South Wales. Melbourne held 730 auctions with a clearance rate of about 63%. Victoria also reported about 1,100 private sales. Brisbane held 107 auctions. The clearance rate there was 57%, and there are also about 1,100 private sales across Queensland. Adelaide held 55 auctions. The clearance rate was about 64%, and there were 268 private sales in South Australia. The ACT held 41 auctions with a clearance rate of about 68% there, and there are also 97 private sales. Perth, it only held one auction over the weekend, but there were about 500 private sales in the state of Western Australia. Well, for more on property, I'm joined by Paul Ryan from REA Group here on the set. Paul, clearance rates, they're going down a little bit. Is that really because there's so much stock out there on the market now, a lot more choice?
I think that's exactly what's happening. We're seeing the market gear up for spring. Next weekend, we've got 3,500 auctions scheduled across the country. That's extremely high. So yeah, seeing auction clearance rates dip a little bit is not unexpected. We're still seeing prices grow at a moderate pace across the country, obviously with some differences across markets. But yeah, that's what we're seeing. Strong buyer demand and continued gearing up for that big spring selling season this year.
Yeah, and was August one of the best months you've ever had in August for the amount of stock on the market?
Yeah, we saw really strong listing volumes. We've seen like a unseasonably large number of listings throughout winter this year, which bodes really well for spring. Buyer choice is very high. And I think the thing that's really benefited the market is that this is the first normal year we've had in some time. Even if we go back before the pandemic, there was the Royal Commission, which had a big impact on people's borrowing capacities. So I think people are just really happy that nothing significant's happened in the market this year.
And the places with the weaker auction clearance rates, Sydney and Melbourne, those are obviously the biggest markets and have lot more stock than everywhere else.
That's exactly right. We have seen more than any other market. We've seen Sydney and Melbourne see more transaction volumes than the rest of the country. We actually have seen, if you combine Sydney and Melbourne, we're only about 2 to 3% below the number of sales that happened throughout 2021 over the year to date this year.
Right.
And 2021 was an enormously strong year. So that shows just how much activity is happening in Sydney and Melbourne.
Now, we mentioned Perth a minute ago, just one auction, but a lot of private sales. Just talk to us about the Perth market.
The Perth market is, I think, white hot. If there was a colour that was hotter than white, it would be that. We've seen prices increase 23% over the past year. Things are growing at a really rapid pace. Now, it must be remembered that Perth really missed out on that early pandemic price boom, and so they're seeing a lot of catch up. If we go back more like a decade, actually the Perth market hasn't seen the strongest growth over that longer period of time, but there's certainly, people are realising just how affordable Perth homes are, and that's really driving a lot of catch up in that market.
And investor activity, is that really starting to ramp up again after being quiet for quite a few years now?
Yeah, we saw investors really vacate the market in a big way throughout the pandemic. There was a lot of uncertainty. But now, yeah, we're seeing investors responding to really strong rents and really strong rent growth. I think investors can see that the rental market is going to remain tight for some time. And so even though if you're negatively gearing a property to start with, which is not unusual, cash flow is likely to turn around really quickly, given we're still seeing rents grow high single digits, 7, 8, 9% across most markets. And investors are about 38% of credit now. That's very high. We haven't seen that for a number of years.
And just on rents, there was a little good news though for people looking to rent a property. I think we've seen rents plateauing almost for the last couple of months. Is that right?
Yeah, we're looking for any good news we can in the rental market at the moment. Rents have been flat for a couple of months at a national level. Rental vacancy rates are ticking up. Now, some of that's seasonal. There's less activity.
It is winter.
Yeah. But I think we're starting to get to that point where we're saying actually it is a bit better for renters now than it was this time last year. And if we continue to see flat rent growth, when renters, income growth across the economy is still reasonably strong, that means that renters aren't facing this situation where rents are growing faster than their incomes, and that's a good thing.
Obviously, spring selling season is the big time for selling property, but what about the rental market? Is it also a busy time of year for leasing?
It runs at a different cadence. So we tend to see that January and December are the two big months for leases turning over, end of the year, students going back to university, things like that seem to influence it. So spring isn't quite as big, but still there's lots of rental activity. We still see more rental turnover than we do sale turnover, just because rental leases tend to be shorter than holding periods for homes.
Paul Ryan from REA Group, thanks for coming on the show.
Thank you very much.